I give up. I thought I was being smart. The markets looked overvalued, the economy seemed shaky, so I thought, it's time for me to pull back on my investments. I even sold some of my investments and I was waiting for that big dip to come. Well, the big dip, it never came and I missed out on quite a lot of money. Let me explain. So I always had this plan with my long-term investing portfolio. Basically, I didn't intend on using this cash short-term, so it's not like I'm investing this money hoping for a really good return and then using it to buy a house in the next 5 years. Any of the cash that I put into my investment portfolio, I don't plan to use it for, I would say, at least until retirement age, right? I don't really have a need for this money right now. So with this goal or this objective in mind, I guess it makes a lot of sense for me to just continuously DCA into this account and then invest as much money as possible as soon as I can, because my long-term or my plan is quite long-term, right? So I have a lot of time. I can ride through market downturns. I can really ride long-term moves up in the stock market, which would be good for me. And I am kind of doing it, especially with my Stashaway portfolio, because with Stashaway, they have very convenient ways for me to invest DCA. So I set up auto debits. Every single month, they will take out a certain amount of money from my bank account, move it to Stashaway, and then automatically invest it into the stock market. So here, I would say there's no issues because I can't really manually intervene. I already set it up. Whether the markets are up or down, I am going to invest with Stashaway. At a point, basically somewhere around last year, I would say the first half of last year, I started overthinking everything because stock markets really started to rally. To explain my scenario a bit more, basically what I decided to do was I decided to withdraw some of my money from Stashaway, or actually quite a bit of my Stashaway investment portfolio, and I wanted to move it into Moomoo. That was the thinking, at least. I wanted to move it to Moomoo because I wanted to have more control over my investment. I still kept my Stashaway DCAs going, so that was still ongoing, thankfully. But the reason I wanted to do this is because, like I said, I wanted to have more control over my investments, and I wanted to pay lower fees as well. Because with Moomoo, you'll only pay a one-off fee, right? You invest, it doesn't matter how much money you invest, you just pay a fee one time. Whereas with Stashaway, there is a management fee every single year. They do deserve it because, they are running a service for us. But yeah, since I do know how to manage my own portfolio, I thought once my money here reaches a certain amount of money that I will want to withdraw it, move it to Moomoo, and then invest that money immediately into an ETF. And then I also had quite a bit of cash sitting in my Moomoo account already, so I had some money there that I used to trade stocks with back in the days, but now ever since I started doing trading as a full-time job, I don't really trade that actively. So I thought, I want to invest that money in my long-term investment portfolio as well. So I had some cash in Moomoo and I also had some cash lying over in Interactive Brokers, just waiting for the right time for me to invest them all into the stock market. So not only did I have the spare cash sitting in both Moomoo and Interactive Brokers, I also decided to sell or withdraw from Stashaway, move it to Moomoo, and then because, I started overthinking things, I decided I'm not going to reinvest that cash immediately. So basically, I'm selling off my investments and I'm not buying back immediately because I thought a big dip was going to come. And the dip, it never came. So ever since the start of 2024, even I would say late 2023, the US stock market has pretty much been on a pretty much straight line up. There weren't many dips other than, this year. But yeah, it was pretty straightforward. So I was feeling a bit smart. I thought there are going to be a lot of uncertainties in the stock market. There's no way it can just keep going up forever, right? So that's why I was waiting for the right time to buy, because I thought, a lot of uncertainties, meaning the stock market could crash. Then there was also the US elections last year and the economy was looking a bit shaky. People weren't so sure whether how the elections would go, basically, and how the markets would react to it. And then throughout the year, there were small dips in the S&P 500, which made me think, this is it. This is when, the US stock market is going to crash. And it doesn't help that every time there's a small dip, there's always all these news headlines about, this time the 20, 30, even 50% crash is going to come. But the thing is, throughout the entirety of last year, every single small dip, it just got bought up extremely quickly, and the stock market just kept going up. And those of you guys who have been through this before, I'm sure you guys understand. What happens is, when you decide to delay your investment, let's say the S&P 500 right now, it's at $500, you decide that you don't want to buy now. And then the stock market goes up to $520. You will feel like, I can't buy now, right? I could have bought at 500, but I didn't. Now it's at 520. I'm going to wait for it to crash to 500 or even lower, then I will buy. To me at least, thinking of buying it at a higher price than I could have before, it felt like I was going to FOMO in. And it felt like, it wasn't the right decision to make. To be fair, there actually was a dip earlier this year, around February, when the US tariffs were announced and there was a lot of uncertainty. I think the stock markets dropped about 20%, nearly, the S&P 500 and NASDAQ. But I didn't think that the dip was going to be bigger than that. I thought, US tariffs, finally, this is it. This is when the stock markets are going to drop 40%, and this is when I'm going to invest all of my cash. So because it didn't reach that level yet, I didn't invest all my money. I did invest some, but not everything. So thankfully, I did at least invest some of my money, because if I didn't, then I would be a lot more upset about this whole situation. But the thing is, even if I successfully timed the bottom of the market dip in February of this year, even if I bought the exact bottom, I was some market wizard and I could time the bottom, it would still be at a higher price compared to if I were to just buy it in early 2024. I really didn't have to go through all this pain if I just invested all of my money immediately. And this is typically what happens. A lot of people who wait for the dip, the market goes up and up and up, there's a dip, they feel smart, they buy it, but if you just look back in the past, you are still buying at a higher price. So what's the point, of monitoring the market? What's the point of doing all this work just to buy at a higher price than you would have or you could have a few years ago? So to illustrate the impact of this mistake, I had around, I would say 40,000 ringgit that I was waiting to invest, and this was just sitting in my brokerage account, right? Not doing anything. And the thing is, interactive brokers, they didn't give me any interest because they only give interest on accounts, I think, with $10,000 or above in idle cash. But at least Moomoo gave me something. So Moomoo, I put it into the Cash Plus, and that was giving me about 3% plus. But the move in the S&P 500 from early 2024, so the start of 2024 until today, which is the 24th of July 2025, the S&P 500 has moved up 36%. That is how much profits I gave up just because I was waiting for the best time to buy. So with 40,000 ringgit waiting to invest but not invested, I did the math basically, I missed out on nearly 15,000 ringgit in investment profits. So that's a lot of money I missed out on just because I thought I was smarter than I actually am. Even as a full-time trader, right? Even as someone who literally looks at charts every single day and makes a living out of it, I still find it difficult to know where the US stock market is going to go. To be fair, I also realized that, ever since I started getting into this world or getting into this job as a full-time trader, the thing is, I trade futures and I trade a lot of commodities rather than indexes. So I don't monitor the markets that much, right? And now I realize that, since, or even though I am a trader, because I don't have enough time to look at my long-term stock portfolios, I may as well just leave it as DCA, leave it as, set it and forget it, and just focus on my full-time job. So what am I going to do about it now? And this is pretty much what I should have done in the first place. So I don't want to dump everything in the markets right now because I think that would really be FOMO, right? 1 year ago, I didn't want to invest because I was waiting for it. Now everything is up. Now I regret it, and now I want to invest. I really think that's not the right decision. But what I'm going to do is I'm going to take this decision out of my hands. So I don't want to manually intervene anymore. I don't want to decide when the right time to buy is. So I've set up DCAs in both Interactive Brokers and Moomoo to completely deplete my cash in these accounts over the next 6 to 12 months. I've set up auto investments into the S&P 500 and a few other ETFs as well. And that's the really good thing about Interactive Brokers and Moomoo. I really like both of these platforms. They do have these auto invest. They have different names for it. But yeah, if you guys want to check them out, I'll leave the links in the description of this video. Anyway, if there really is a big dip, let's say over the next 3 months, Donald Trump says something crazy and the market really dumps 20-30%, then yeah, I will move my investment forward a bit, but I'm not going to delay it anymore. The maximum time it will take is 6 to 12 months, but it could be shorter if, things really come to a dip. It's honestly such a simple plan that I could have followed, basically from the start, but I always let the emotions get a control of it. Or it's not really emotions, it's just me thinking that, I know where the market is going to go, especially because I'm a full-time trader. Of course I should know, right? Well, like I said, I don't really follow these markets, so I shouldn't have been that. As they say, time in the markets beats timing the market. It is extremely hard even for someone like me. It's better to just let your long-term investments be on autopilot and then focus all of your time, all of your energy trying to grow your income in your full-time job or even in a side job. And I'm doing the same thing for Bitcoin because with Bitcoin as well, I always think the price is too high. I'm not going to buy now, I'm going to buy later on, and then the dip comes and I don't want to buy. So what I've done is now I've set a weekly reminder on my iPhone every Friday to buy some Bitcoin, and I will be investing a consistent amount of money into Bitcoin every single week until the cash in my Luno account is depleted as well. Yes, I also have cash in my Luno account because, I like to try and time everything, but like I said, I've given up. Who knows? Maybe me feeling like this really is the sign of a top in the market. Me feeling FOMO, me feeling impatient, waiting for a market crash to come, could be the top. And there's no guarantee that the stock market performance will be like the last 15 years, where it's basically just one straight line up. Maybe in the next 15 years, the stock markets won't do so well. But like I said, at this point, I'm like, whatever, rather than trying to think, is the stock market still going to go up? Is it still going to go down? If you look at a long enough horizon, if you look at the last 80, 100 years for the S&P 500, it does tend to go up over the long run. Maybe there is a 10-year period where things aren't going so well, but if you give it more time, 20, 30 years, then it should be fine. So yeah, rather than focusing all my energy here, just DCA, set it, forget it, and see what happens by the time I retire. And like I said, since I'm leaving this for a very long time, I would say minimum 10 years, more likely 20, even 30 years. In the grand scheme of things, it really doesn't matter whether I buy here or I buy 10%, 20% lower. It really doesn't matter because it's such a long-term horizon. The returns would probably trump this by a lot more. So the risk of me missing out on the entire move is a lot bigger than me buying at the top right now. And for those of you guys who are watching this video, I do recommend you to, follow this advice of just investing consistently, not worrying too much about where markets are going to go. And I know that a lot of you guys are actually doing pretty well. A lot of you guys just, you don't care about the markets. You just know that you need to invest your money. So you set up your auto debits, you just let it run. And ironically, you're probably just doing better than me. But for those of you guys who are into the markets, let's say you like to follow world news, you like to see where stock prices are, then I would just warn you to be very careful of forming biases, especially when it comes to your long-term portfolio. If you want to trade, then set it aside into a separate trading portfolio. Don't try to trade your long-term investment portfolio. And if you do see a market crash, rather than panicking or worrying about where or what's going to happen to your investments, just try and buy the dip, right? Whenever there's a market crash, stick to your plan. If you have extra money, just invest that extra cash. This is the second time I'm making this mistake already, because the first one was in 2020 when there was that major crash, I think 30, 40%. And I completely missed it because I thought, it's going to drop more, and it didn't. So that one, I really bought way too late. This time around, at least I did buy some stocks or some ETFs, but I still held quite a bit of cash because I thought, it's not just going to go down 20%, it's going to go 30, 40%. And that obviously never came. So let me know in the comments below to make me feel a bit better at least. Have you guys tried timing the market in the past, only to regret it later on? If you guys want to trade or invest into stocks or crypto, then check out Moomoo or Luno. I'll leave the links down below in the description of this video. And by using my link, you'll be supporting the channel as well as getting some freebies for yourself. Thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.